Now we will proceed for the next session on the changes in personal taxation. Joining us we have Aarti Raote, partner at Deloitte India as a subject matter expert. Ms. Raote is a chartered accountant with over 17 years of professional experience in ex parte tax. As a partner in Deloitte Global Employer Service in Bangalore, she has advised clients on diverse tax areas such as ex parte taxation, assignment planning, social security, and stock awards. Her industry experience spans technology, consumer business, and GICs, where she focuses on structuring compensation, managing short-term travel, taxation, and optimizing social security compliances. She also derives technology solution for HR mobility to help businesses improve efficiency and reduce cost. Welcome, ma'am. Good morning.
Good morning.
Uh, the stage is all yours now.
Okay, thank you. Thank you, Divya.
Thank you, ma'am.
Thank you so much for having me here. I hope my screen is visible. Can you
Yes, your
see?
screen is visible. Please put it on slide share mode.
Okay. Yes,
Yes, it's perfect now.
right. Yeah, is it visible now?
It is visible.
You can see the slide, right?
Yes, yes.
Okay, great. So thank you all. And it's a pleasure to be here. And I think Mr. Anand has done a great job in setting the context for this discussion. This year, indeed, the finance minister has put a smile on everybody's face, and especially the individual taxpayers, by providing a substantial tax saving. The finance minister has announced changes in the tax slabs as well as income tax rates. And we see these changes after a gap of several decades. And it's likely that the taxpayers have more money in the pocket and it will boost the consumption as expected by the government. So let's see some of the changes that will impact individuals. We will start off with the tax rates and proceed to see what kind of savings are available if the taxpayers opt for the simplified tax regime. And then we will look at comparisons between the regular tax regime or the old tax regime and the simplified tax regime to see whether it's still relevant for people. We'll also touch on some key provisions in the budget proposals that will impact individual taxpayers. So now let's turn to the tax rates. Firstly, there is absolutely no change that is done in the normal tax regime. Since 2000, when the simplified tax regime has been introduced by the government, there have been several, what I would say, carrots or concessions that are that were provided in the budget for the simplified tax regime. They have increased the standard deduction in the earlier years or reduced the surcharge rates and so on and so forth. And this year too, the changes have been announced only in the simplified tax regime. Uh, Now, as per statistics last year, there are 72% of the taxpayers who chose simplified tax regime. And with the changes in this budget, it is likely that it is going to increase even further. So the first change in the simplified tax regime is that the basic exemption for income tax has increased from 3 lakhs to 4 lakhs in the new regime. So up to 4 lakhs, there is nil tax. And then you have the slab rates, which have also undergone a change. So 4 lakhs to 8 lakhs will now be 5%. Earlier, it was 7 to 8 lakhs, which was going into the 10% bracket, but there's 1 lakh, which is still now in the 5% regime. Then you have 8 lakhs to 12 lakhs, the next 4 lakhs that will be subject to tax at 10%, and then the next 12 lakhs to 16 lakhs, which will be taxed at 15% now, and 16 lakhs to 20 lakhs, which will be taxed at 20%, 20 lakhs to 24 lakhs of total income, which will be taxed at 25%, and anything above 24 lakhs, income above 24 lakhs will be subject to a tax rate of 30%. A phenomenal change for any taxpayer, because now this slab rate has jumped from like 15 lakhs at 30% to 24 lakhs at 30%. So there has been this huge jump, which will result in more money in the pockets of taxpayers. There is a tax saving up to a maximum of 1,10,000, which is available for the income, a person earning income of 24 lakhs and above. This is excluding surcharge and cess that is available. So this is the bare minimum that any person who's earning 24 lakhs saves. Uh, in the case of resident individuals who have total income up to 12 lakhs, uh, there will not be any tax. This limit was 7 lakhs earlier, and now this limit is 12 lakhs. So this means a significant tax saving of for such taxpayers of 80,000. So that is 80,000 more in the hands of the taxpayers going forward. So one needs to know that the limit of 12 lakhs will apply only to regular income. The finance minister also clarified this. So the limit of 12 lakhs has to be applied only to regular income, which means the income for which the slab rates apply. It cannot be applied to income which is subject to special tax rates. Like, for example, you could have cryptos or capital gains. For such income, this 12 lakhs limit will not be counted, and you will have to pay tax at special rates, irrespective of your level of income, right? However, there is marginal relief that will be available to taxpayers who are, just at the cusp of a changeover. This means that any amount of incremental tax should not exceed the amount of incremental income. That is what marginal relief means. So let's look at an example, because there has been a lot of confusion in the minds of people because to check on whom this provision really impacts, right? So firstly, to clarify, this provision is applicable only to resident assessees, right? And if we have a taxpayer whose total income is less than 12 lakhs, and this is from a regular source of income like a salary income or income from other sources, then the person will not have to pay any taxes. However, let's take another example where the taxpayer has 10 lakhs of regular income and 2 lakhs of capital gains. In this case, the taxpayer would have to pay tax on 2 lakhs of capital gains because it is income subject to special rate, but not on the 10 lakhs. Now, let's take a slightly different example where we have a taxpayer who has total income of 12.5 lakhs, just 50,000 more. Now, in this case, the income is comprising of say 11.5 lakhs of normal income and 2 lakhs of capital gains again. In this case, the taxpayer would not be eligible for the rebate even though his regular income is only 11 lakhs, because his total income now exceeds 12 lakh threshold, right? But in this case, the person will be eligible for marginal relief. I hope in all these examples you've understood the comparison between the three, that if you have income from a regular income from a normal source which slab rates apply, and that is less than 12 lakhs, then you are eligible for a rebate. Yes. So with this, let's move on to the next slide where we see the tax savings, right? We just compare the tax savings for different levels of income. If the proposed tax rates are applied, and then we compare that to the current tax rates under the simplified tax regime only, and on the screen you will observe that there is a saving for everybody irrespective of the income level, right? So right from the low taxpayers to the higher taxpayers, everybody has something to save in this proposal. The saving range is from 31,000 to as high as 1,43,000 for a higher income slab. And the higher income slab, there is a change only because on account of the cess and surcharge which is applied. So all these rates have been computed after applying the cess and surcharge to you, right? So you see, as a comparison from the current simplified tax regime rates to the new tax regime rates, there is a significant change or a significant saving to the taxpayers, which of course the government expects that it will be used for consumption. Let's go on further to see whether the significant reduction in tax rates makes the regular tax regime actually irrelevant or redundant, right? Because you all would know that you as an individual, you have an option to choose between the old tax regime or the regular tax regime and the simplified tax regime. And the old tax regime rates are much more higher, but they permit traditional deductions and exemptions like an HRA, LTA, housing loan, or Chapter 6A deductions like 80D, 80C, 80E, all of those. The simplified tax regime, on the other hand, gives you reduced rates but does not permit any deduction. So, as you might observe, what we have tried to do here is that we have the income levels of 10 lakhs, 14 lakhs, 16 lakhs that you see on the left hand side, and the possible deductions. Now, this deduction, if you see the number of 4,50,000, this deduction is basically your HRA or your LTA or your ATC housing loan. All this makes up these deductions that are there. So for an income person having a total income of 14 lakhs, right? He is better off in the new tax regime unless he has a total deduction of about 5 lakh 18,750. So if a person having a total income of 14 lakhs has deductions more than, say, let's say 5 lakh 20,000, then in that case, the old regime still will be much more beneficial to him as compared to the new regime. And in a similar manner, we have computed the deductions, possible deductions for different levels of income. So for a person earning an income of 16 lakhs, this amount of deduction would be around 5 lakh 70,000, and so on and so forth, right? After the level of 50 lakhs, there is surcharge which kicks in. So those calculations become a little different, right? But at the base level, this is the comparison. So in just to summarize, what we kind of can conclude that a normal level simplified tax regime is definitely beneficial. But if you have significant amount of deductions, housing loans, maybe a 80E loan, then in that case, you really need to make sure and check whether the tax, with the tax calculation between the old tax regime and the new tax regime, and take a decision of which is the regime that is most beneficial to you. And each one to it's their own, but do not presume that the simplified tax regime is much more beneficial. It would be beneficial for a lot of people, but not to everybody, right? So this is something which I want to leave you all with. Moving on further, let's look at another provision, which is in house property income. This is a welcome change, though it is clarificatory in nature. There is no change or no additional benefit which is extended to the assessees here. But the current provision allows the taxpayer to treat two houses owned by him as self-occupied and consider the annual value as nil. Okay, any house, the third house, even if it is not occupied, even if it is not rented, it will still be deemed to be rent. But up to two houses, you can provide a nil value, a nil annual value. However, there are two conditions which are there currently. One is that either the house is occupied by the owner for his own residence, or the owner is not able to occupy it due to employment, business, professional commitments, and he is at some other location. Now, these two conditions, while they look very simple, they were causing a problem because it is possible that the houses are not totally vacant, but the house owner's parents or spouse is staying in that house. And this was proving out to be a litigious issue where the, tax officers were reading these provisions as very strictly, and denying the exemption of a nil annual value, right? So because of that, this proposal is welcome where it says that the property value, annual value, will be deemed as nil if the owner resides there or if he is unable to occupy for any reason. So the conditions that are stipulated are no longer applicable as long as the owner is residing or the house is or he is not able to occupy it, but he's not let it out, then also you will have nil value. So this is much more, what I would say, this is to reduce the amount of litigation. This will help, right? The next one is on the updated tax return. Now, I would say this is a significant change um, to the taxpayer because it provides you opportunity to correct or rectify your tax returns for a longer period of time. Today, the provisions mention that you file an updated tax return up to 24 months from the end of the assessment year to which the income relates to. However, there is an additional payment of 25%, which is applicable if you revise in 12 months, and 50% if it is revised in less than 24 months, right? This is extended for another 2 years so that the taxpayer can still file updated return within a period of 4 years from the due date of filing the tax return. And this is done with payment of 60% of taxes if the revision is within 3 years, and 70% if the revision is within 4 years. Now, one needs to note that a tax return cannot be updated if any assessment is going on or if there is any show cause notice which is issued under 148, which are the um, concealment provisions which have been triggered. Also, updated returns, as the law reads today, cannot be filed unless you have some income to be declared. There's some additional tax payment to be done. So currently, it does not provide an a chance to the SSE to file an updated return uh, only if you want to correct some data or maybe some, um, ask for more brought forward losses or things like that. For that, updation is not possible. But if there's some income which has been missed to be offered to tax, or if there is some kind of change in the tax rates that are applicable, then yes, you can file an updated tax return. This is very important in the case of, let's say, the employer notices some kind of change in the tax position or some income which has been wrongly classified, and on account of that, there is a revenue leakage. Then, in that case, he goes and files the quarterly tax return, refiles, and there's Form 16s which are issued. Obviously, there's a mismatch with what the employees have already filed, right? And this particular provision enables the taxpayer to go and revise his tax returns. In the speech, the Honorable Finance Minister did highlight the importance of trust for the taxpayers. And this is one move that enables the taxpayers who want to rectify their returns an opportunity to do so. So this is a welcome change for the taxpayers to ensure that there is correction so that any penalty and prosecution kind of measures are avoided in case there is significant income which is escaping assessment. So this is something that people have to take cognizance of. Moving on to other amendments, one of the key amendments that we see is in respect of ULIP. Again, this particular provision is clarificatory in nature, right? ULIP enjoys a tax exemption today where the premium in any of the years during which the policy term is there, it does not exceed 10% of the total sum assured, or the total premium or paid during the policy's term is less than 2,50,000. If these conditions are met, you will have your ULIPs exempt under Section 1010D. Now, ULIPs not falling in this category, that is, ULIPs which are not exempt, it has now been clarified that this will be treated as capital gains, and they will be taxed similar to equity oriented funds. So they will be either long term or short term based on your period of holding, but they will be treated as equity oriented funds. This is a clarification which will reduce litigation and provide the taxpayer complete clarity on how they have to offer their income to tax. The next amendment or the next proposal is on perquisite taxation, where the government will notify certain income levels for taxation of some benefits. Um, the government had not touched the salary threshold, so government is likely to enhance the salary thresholds under the perquisite provisions to tax certain benefits like overseas medical treatment. This is applicable for income people having income in a very low income group. And these income thresholds were not examined for a while, so it is expected to be notified by the government shortly. The third key provision could be for people who have invested money in NPS Vatsalya accounts, where you invest for your minor kids, and there was no tax benefit available for parents or guardians who were contributing to NPS Vatsalya account. So it is proposed to put it almost at par with the current NPS accounts. Uh, and what has been proposed is that up to a overall limit of 50,000, the deduction will be available for the old tax for those who apply the old tax regime. Also, partial withdrawals for specified contingencies like a medical treatment or disability or education, up to 25% will be exempt on withdrawal. The balance will be taxable in the year of withdrawal. And in case of the minor passing away earlier, the parents or guardians will not be subject to tax, right? So this is one of the clarifications that have been issued. The other last part was on gig workers. This is very important because we are seeing a sizable increase in the population of gig workers across industries. It's not just restricted to platform companies. It is kind of what I would say applied by all employers across the globe. So this is really important, and because it is emerging as a larger workforce, government is planning to facilitate the issuance of identity cards and ensure that gig workers have the coverage of social security. The labor code, which was announced about 4 years back, which is still not effective, by the way, that had support reference to gig workers, and the government is going to be extending healthcare benefits through the PM Jan Arogya Yojana. So people are requested to kind of register on the eShram portal, and this is going to benefit something like 10 million gig worker and platform worker. Of course, government has not yet come out very strong and very clear on the labor code. We understand that most of the states, up to 33 states and union territories, have already come up with some rules. So there is a buy-in from almost everybody from the state level. So we know that is the progress that has been done on labor code, but unfortunately, there was the date is yet to be announced for it to be effective. So this is one of the misses that I feel it could have been spoken about. The ELI schemes also, we are awaiting the final details on the scheme. So those are some things which could affect employees at large, employers as well as employees. But overall, I would say there's a very, very positive sentiment on this budget as far as individuals are concerned. At least more money in the hands of the individuals, which could help beating inflation and increasing the consumption. There is also a very strong statement which the finance minister mentioned about trust, which is clearly indicative of what is expected from the from the what I would say taxpayers, because the government wants to reduce litigation. They also want to reduce uh, the fraudulent practices today that are there. So, and that's why the trust on simplified tax regime. So, looking at a combination of this, there is a nudge to the taxpayers to make sure that you are filing your tax returns and filing your tax returns correctly. Yes. With that, I will pause here and hand it over back to Divya.
Thank you so much, ma'am, for covering everything in detail. Thank you so much. Before we let you go, there are a couple of queries. Should I take it?
Yes, please.
Yeah, just let me have a quick look. Just 1 second. The first one is, should special incomes be included in the rupees 12 lakhs threshold for Sections 87A rebate eligibility, given that the tax on such incomes don't qualify for the rebate itself?
Yeah, you cannot, as I clarified, if you have income which is subject to special rates, that really does not qualify for rebate. That is something that you will have to pay taxes on. So if you have the only source of income that a taxpayer might have is capital gains, then even if you have, say, 10 lakhs of capital gains, you will, end up paying tax. You will not qualify for the rebate.
Okay. Okay. The next is the government focusing on new tax regime under Section 115 PAC. Do you think the older regime will be scrapped off in coming years?
So definitely, as I said, based on the last statistics, 72% people have opted for the new tax regime, which means
Okay.
that at least last tax season, 28% people saw that the old tax regime is still beneficial. And if you see, I have given a comparison also here, right? Now, whether the people will have so much of deductions is a question, right? Because you will have to invest into ATC. We see a lot of people now, newer employees, Gen Z, millennials, they prefer not to even invest in provident fund, which was kind of a mandated solution or mandated option which was given earlier. So given these kind of changes, whether the people have these kind of deductions is a question mark. Definitely, if the takers like the 72% increases to 90%, 95%, then we will see that the government will ease out the old tax regime because it will have no takers as such, right? So it depends on the interest of the taxpayers as to how much they are interested in really claiming that deduction. The second part over here is more specifically, if I have to kind of say, all these deductions require certain kind of administrative discipline, right? Both for the employer and employee. Employee will have to submit supporting documents to the employer in time, and then the employer has to kind of verify this, permit this, approve, disapprove, all those kind of things. If you go under the simplified tax regime, all this is just given weight, right? So this is a second thing, whether you can, really look into those kind of aspects as well. And the third aspect is when you file the tax return, let's say you miss out something to be given to the employer. Let's say your HRA receipts, you don't give it to your employer, and you want to claim HRA in your tax return. What happens is that immediately there is a mismatch which is thrown because you're claiming HRA deduction outside of your Form 16, right? So there is what I would say, trigger to the tax authority saying that this person would not have given HRA receipts to the employer. So they call for this additional information. So it goes into a loop over there of additional scrutiny, additional verification. In the last press release, or rather a news report, there was something like 90,000 taxpayers who refiled their tax returns, withdrawing additional claims. So, as I said, the government spoke about trust, and this is where the finance minister was hinting at. So it is likely that in the coming years, if there are no takers for the old tax regime, it will be, eased out, and the government really intends to do that.
Okay. Ma'am, don't you think in that case the small schemes will lose their shine as many people invest in them to get to benefit of deductions only?
Yes, that is definitely a drawback. The small saving schemes, you have a lot of these, right? Your provident fund, your post office saving schemes, and a lot of things that people invest in, like your saving certificates and things like that. And one aspect of this, Divya, is that all these are very long-term investments. You don't keep withdrawing these on and off, right? So
Yes.
these savings go a long way in building the infrastructure for the country. Because, like, you invest in PPF, okay, even if you are investing something like as small as 10,000, there will be countless people who are doing that, and this you cannot withdraw up to 15 years. So, which means for 15 years, your money is locked up, and it is put to good use, hopefully, is what we can assume. So definitely there is a little less shine, or as you said, it loses the luster that is available on these small savings. But the other side of it, we see a lot of individuals who say that you don't force me to invest into, things which are approved under ATC. I don't want that. I want to invest, but I want to invest freely. That also is there. So there are different, what I would say, facets to the same challenge.
Okay. Thank you. Ma'am, there's one more question. If a person has a salary income of rupees 10 lakh and capital gain of rupees 4 lakh, will he be eligible for rebate?
So, okay, what it refers to is 14 lakhs of total income, right?
Yes.
So if
Yes.
your total income is 10 lakhs plus 4 lakhs, 14 lakhs, so you're out of the, threshold for rebate. But what you could possibly look at is marginal relief, which means you don't pay additional tax more than what you have got additional. So that can be available, which is really marginal, honestly. But the biggest thing, okay, if you want a 12 lakhs rebate, you have to have a threshold to meet that 12 lakhs.
Okay. Thank you. Let me have a quick other more queries. There's one query in chat box. Does dividend income from shares qualifies for special tax rates?
Uh, Sorry, please come again.
Does dividend income from shares qualifies for special tax rates?
Oh, it would be in the normal tax rates, because you see what is normal income. Normal income is something which you apply your slab rates to, right? This
Yes.
The slab rates are there, right? You apply the slab rates to that income, that is your normal income. Where there's a special rate which is specified, like you have your for capital gains, 12 and a half and all, 15%. So that is different. That doesn't come in these special tax rates.
Okay. That's all from our side. Thank you so much, ma'am, for the insightful session. Thank you so much. It's a pleasure having you.
Same here. Thank you.
Thank you so much.